Welcome to Consumer Times. In today's video, we'll discuss a very important topic as in today's digital age, financial institutions such as banks, non-banking financial companies, NBFCs, and other financial service providers increasingly outsource their operations to third-party vendors. While outsourcing can lead to cost efficiency, enhanced service delivery, and specialization, it also brings forth critical challenges, especially concerning the security and misuse of consumers' personal information. This rising trend of outsourcing has led to an increase in cybercrimes, creating significant problems for consumers. Before we get started, please comment, like, share and do not forget to subscribe and press bell icon to motivate us. The main is understanding outsourcing in financial services. Outsourcing refers to the practice of contracting specific functions or services to external third-party providers rather than handling them in-house. Banks and NBFCs commonly outsource activities like customer service, data processing, loan recovery, IT management, and more. While this practice allows financial institutions to focus on their core functions and reduce operational costs, it opens the door to vulnerabilities. Consumer-sensitive data, including financial information, identity documents, and transaction histories, often pass through the hands of third-party entities. This creates multiple potential entry points for data breaches and misuse. Consumer challenges stemming from outsourcing, data breaches and leakage of personal information. One of the most critical issues associated with outsourcing is the risk of data breaches. Personal and financial information, including Aadhaar numbers, PAN details, account numbers, and transaction histories, can be leaked or stolen during outsourcing. Often, third-party vendors may not implement robust cybersecurity measures, leaving data susceptible to hacking and unauthorized access. Data breaches have far-reaching consequences, including financial losses, identity theft, and reputational damage for consumers. Misuse of consumer data. Unscrupulous third-party agents may misuse consumer data for illegal activities such as phishing, fraud, or selling information to telemarketers and cybercriminals. Instances have been reported where consumer data was used to create fake identities, leading to fraudulent loan applications, unauthorized transactions, and other criminal activities. Increase in cybercrimes. Outsourcing has contributed to a rise in cybercrimes, as leaked data often ends up on the dark web or in the hands of hackers. Common cybercrimes include unauthorized access to bank accounts, phishing scams, credit card fraud, and ransomware attacks. Such incidents have left many consumers financially and emotionally distressed. Legal frameworks and redressal mechanisms are often inadequate to address the complexities of data breaches involving multiple entities, increased spam and unsolicited calls. Leaked consumer information is often sold to telemarketers, leading to an influx of spam calls and messages. These intrusions not only violate consumer privacy but can also lead to scams and fraud. Key examples and case studies: phishing scams. Phishing scams targeting consumers have risen dramatically. For instance, many consumers receive fake calls or emails from fraudsters posing as bank representatives, tricking them into sharing OTPs or other sensitive information. Fraudulent loan applications. There have been instances where leaked personal data was used to apply for loans in consumers' names, leaving them to deal with the repercussions of unpaid debts and damaged credit scores. Identity theft. Identity theft remains a significant issue. Leaked data such as Aadhaar numbers and PAN cards have been used to commit crimes or open fraudulent accounts, causing immense stress to the victims. Regulatory framework and loopholes. Despite the existence of regulations such as the Information Technology Act, 2000, and guidelines from the Reserve Bank of India, RBI, there remain significant loopholes in ensuring the security of outsourced services. The Personal Data Protection Bill, still in the drafting stages, has yet to provide robust safeguards for consumer data. the RBI mandates that financial institutions must ensure third-party vendors comply with cybersecurity and data privacy standards. However, enforcement of these guidelines often remains lax. Many third-party vendors, especially smaller ones, fail to invest in advanced cybersecurity measures due to cost constraints, leaving consumer data vulnerable. Consumer awareness, a critical need, given the risks, consumers must take proactive steps to protect themselves. Here are some measures. Be cautious with personal information. Avoid sharing sensitive information like OTPs, passwords, or account details over calls or messages. Banks and legitimate institutions never ask for such details. Monitor bank statements regularly. Regularly check account statements for unauthorized transactions. Early detection can help mitigate financial losses. Use secure channels. Ensure you only access banking services through official websites or apps. Avoid clicking on suspicious links in emails or messages. Report suspicious activities. If you suspect misuse of your data or encounter phishing attempts, report the incident to your bank and the CyberCrime helpline. Educate yourself. Stay informed about common scams and fraudulent practices. Knowledge is a powerful tool against cybercrime. What financial institutions must do to regain consumer trust and enhance data security? Banks and NBFCs must take the following steps. Strengthen vendor contracts. Contracts with third-party vendors should include stringent data protection clauses, ensuring accountability for breaches. Regular audits and compliance checks. Conduct regular audits of outsourced vendors to ensure compliance with cybersecurity and data privacy standards. Invest in cybersecurity. Financial institutions should allocate resources to implement robust cybersecurity measures, including encryption, firewalls, and intrusion detection systems. Consumer data minimization. Adopt a data minimization approach, collecting only the information necessary for service delivery and reducing the risk of misuse. Transparency with consumers. Be transparent about outsourcing practices and inform consumers about how their data is being handled. Regulatory and policy recommendations. Policymakers must also step up to address these challenges. Mandatory data protection laws. Enact and enforce comprehensive data protection legislation, ensuring financial institutions and third-party vendors are held accountable for breaches. Stronger oversight by RBI. The RBI must strengthen its oversight of outsourced services, ensuring strict compliance with data privacy guidelines. Consumer redressal mechanisms. Establish robust mechanisms to address consumer grievances related to data breaches and cybercrimes. Penalties for non-compliance. Impose hefty penalties on institutions and vendors failing to protect consumer data adequately. The role of technology in enhancing security. Emerging technologies like blockchain, artificial intelligence, and machine learning can play a pivotal role in mitigating data security risks. Financial institutions can leverage these technologies to enhance data encryption and access controls, monitor and predict potential threats using AI-driven analytics, create immutable transaction records using blockchain, reducing fraud, while outsourcing services can offer significant benefits to banks and NBFCs, it must not come at the cost of consumer security. Financial institutions have a moral and legal responsibility to safeguard the personal and financial information entrusted to them. By adopting stringent cybersecurity measures, ensuring vendor accountability, and raising consumer awareness, these challenges can be addressed effectively. For consumers, staying vigilant and informed is crucial in navigating the digital financial landscape. Together, with proactive efforts from regulators, financial institutions, and consumers, the risks associated with outsourcing can be mitigated, fostering a safer and more secure environment for all. If you found this information valuable, don't forget to like, share, and subscribe to Consumer Times for more updates on consumer awareness and business tips. Thank you for watching. See you in our next video. Stay safe, stay aware.